Thank you very much, everyone, for attending the Diversified Administration 1094-1095 Reporting Services webinar. So I'd like to thank everyone for being on time. I do apologize for the 2 or 3 minutes tardy on my end. We were just finishing up a Form 5500 reporting webinar. Great attendance, and there were just more questions than I had anticipated. Ran a short bit over, but we're able to end that mostly on time, and I'll be able to go over all of the ACA reporting information now. Just so you know, everyone's going to be on mute. We will be taking questions at the end. As I'm going through the presentation, if you have any questions, go ahead, type them in the chat window. I will do my best to address them as they come in, and if not, I'll answer any remaining questions at the end. So, in regards to the ACA reporting, the first question is, who has to file? Because if any of your clients don't need to file, pretty much they don't need to worry about anything that follows. So to determine if that applies, we need to see if they have to file. Anyone with 50 or more full-time equivalent employees is going to be required to file the 1094s and 1095s. Full-time equivalent is a new term that didn't really exist before the ACA or Obamacare. It's pretty self-explanatory though, and it basically means you have the equivalent of 50 full-time employees. So if you have 2 part-time employees and then they total 30 hours or more, they count as a full-time employee, full-time equivalent employee. To do the math, if you take the 50 full-time equivalent employees working 30 hours per week, 52 weeks a year, you come up with 72,000 hours. So technically, if you hired 72,000 people, each to work 1 hour, you have hired 50 full-time equivalent employees and would be required to file. So that's the magic number there, is 50 full-time equivalent employees. If you have that or higher, you do need to file. Now, with the filing that's due in 7 days, the 2015 filing, the IRS is giving a good faith exemption or good faith effort. If it looks like you've done what you're supposed to do, they're going to be pretty lenient. For the 2016 filing, they made it pretty clear they are not going to be lenient. They'll be strictly enforcing all of the regulations across the board. That means they'll be assessing penalties for both inaccuracies and other kinds of noncompliance. In addition to that, the IRS is limiting the amount of safe harbors that certain employers can take to avoid being penalized. Now, a number of them were specific only to the 2015 plan year, so those are going to be eliminated in their entirety. Now, once you determine who needs to file and say, okay, we meet that 50 full-time equivalent employees, why are we going to do this anyways? Well, they hit you with really stiff penalties if you're not going to comply. If you fail to file a return to the IRS, it's $250. Originally, that fine was $125, but last year, a Trade Promotion Authority bill passed, and part of promoting trade authority involved doubling the penalties for much of the ACA reporting. Now, if that failure to file is with both the IRS and the copy that's supposed to be given to the individual, that $250 penalty is doubled again to $500. The IRS has not defined intentional disregard, but if they determine that your failure to file is caused by intentional disregard, that $250 penalty noted above is doubled to $500 for each failure. So $500 to failure to file with the IRS and $500 for the failure to file to the individual. And when intentional disregard comes into play, there's no cap on the amount of penalties that can be applied. If the penalties aren't the result of intentional disregard, the total cap on the penalties is still $3 million. So it's an incredibly staggering amount. We want to make sure that you do your filing, you do it on time, and you do it right. So that's what we're going to assist you with. And for those kind of keeping track, this penalty before the trade promotion bill was half what it is now. It was $1.5 million. But just as the other penalties doubled, so did the cap. So that's just something to be aware of. So with the talk of penalties and those kinds of things, it's important to talk about some deadlines. What we've done is we've had our price basically from January 1st, and that's good through the end of the second quarter on June 30th. Anything after that, we do expect the prices to go up about 10% for anyone who signs up in the third quarter. And if you wait till the fourth quarter to sign up, it's probably going to go up another 10 to 15%, because then we're essentially doing an entire year's worth of work in about 2 or 3 months. Now, once you sign up, we often get the question of, well, how often do we need to get you the data? So data, basically, we need a year to date. So basically now just be first and second quarter. And then either send us something, third and fourth quarter, or if you have a very large round of terminations or hiring events, maybe you acquire a new company and you've brought on a couple hundred people, you can go ahead, update the spreadsheet, and send that to us. Even in between quarters, we'll go ahead and review it and make sure everything's entered correctly. Now, 2 other deadlines, which aren't Diversified Administration, but are actually the IRS, are the filing deadlines. Last year, we had the extension where the forms had to be mailed to the employees by March 31st, and the e-filing to the IRS had to be done by June 30th. That's not going to be the case for next year. Next year, it's going to be what it originally was, with the deadlines of January 31st to mail to the employees and March 31st to e-file with the IRS. Now, as far as foreseeable issues, we gained a lot of experience with last year, and that gave us the insight of what some of the things we can expect for this year. Now, currently, there are no filing extensions to be announced, so you'll want to jot down that January 31st date to get the forms to the employees and March 31st date to e-file with the IRS. As I mentioned previously, some of those 1095-C safe harbors are either going to be reduced or eliminated completely because they only applied towards the 2015 year. Last year, when the IRS came out with their 2015 draft filing instructions, which were radically different than the 2014 final filing instructions, that kind of caused some upheaval. It was like they're moving the goalpost, changing what they're asking for. Well, not too long after the draft filing instructions came out in 2015, the final filing instructions came out, which were radically different than the draft instructions. So they, again, changed the goalpost, kind of caused some stress for the people. They had to change the information they're gathering, how we're preparing it, those kinds of things. So having gone through that, we can confidently say that we anticipate the IRS is probably going to do something similar this year. We expect the 2016 draft filing instructions as well as the 2016 final filing instructions. So just know that it's likely they'll continue to move the goalpost, but that we're going to keep our eyes and ears on the situation, so as soon as there's a change, we're able to proactively respond to that. Now, in addition to that, we're also aware that these changes are likely to result in some kind of modification to the actual forms from the IRS, the 1094 and 1095, as well as our data gathering spreadsheet. So we've got a team of experts basically ready to digest that IRS information, update the spreadsheets, and make sure that that's communicated to all of our clients. Now, as I mentioned, we do keep up to date on all ACA reporting issues. Last year, having processed more than 20,000 separate forms, that has just given us a wealth of experience we're able to bring into this year. There were a number of data gathering processes which we're able to streamline, make much more efficient, and simplify the data gathering process. So looking at the attendee list here, I see a lot of new names, but some people who have also used us for the prior year, and those people in particular will really appreciate the simplifications we were able to incorporate into the data gathering spreadsheet. Once we get the data, we're going to provide continuous support to ensure that the data is both complete and accurate. As we review the data, if we see that you offered an individual coverage in March, but you didn't hire them until May, well, no, hey, something's up here. This requires attention. So, well, actually, it's not just a data entry. We're not just importing it. You're getting ACA-trained experts looking at this data, reviewing it for accuracy, consistency, and those kinds of things to make sure that it's done on time, and it's done right. The service we offer is a full-service solution. So not only do we get you the data gathering spreadsheets, review the data with you to make sure it's correct, but we also take care of the fulfillment. We're going to print and mail the 1095-Cs to the employees by that by that January 31st deadline, and we'll also take care of the e-filing with the IRS by that March 31st deadline. Now, most of you are probably familiar with this. This is the 1094-C, and Part 1 up here generally pertains to the employer information. Now here they actually add a whole mouthful. It's the applicable large employer, and what that is that means an employer with 50 or more full-time equivalent employees, which are the employees that need to file this. The 1094-C also gives some other information to the IRS. Here it lets them know the total number of 1095-Cs that will be submitted along with the 1094-C. Gives you some other information. It lets the IRS know, is this ALE member the member of an aggregate ALE group? Well, that's quite a mouthful. All they're really asking is this company part of a controlled group, or aggregate ALE group as it's called with the ACA language? You've got some various qualifying offers and transitional reliefs here. We do fully expect that this Section C4980H transitional relief will be going away because that only pertains to 2015. It was for those group of 50 to 99 employees who needed to file but didn't need to offer coverage. So that's one of the safe harbors that's going away. This is page 2 of the 1094-C, and it gives some additional information. Lets them know, was the coverage that you're offering minimum essential coverage? If it was, you'd have yes. If not, no. It gives the counts for both the full-time employee accounts and the total employee counts. Gives some other information here about the aggregate group indicator as well as transition relief, which again, this whole column will probably be eliminated when they make the change because this will no longer be applicable. Now, this incredibly plain-looking page here is probably the most scary out of anything associated with this filing. As far as I know, as far as any of the ERISA attorneys we've consulted with, as well as brokers and HR executives, basically said this is the first time that they believe the IRS has asked for information on the corporate structure of controlled groups. Now, that's interesting information. So it says, okay, well, this is why did they want this information? And the example we're given is, let's say a company has 200 employees. They totally need to file. Well, they say, no, we've actually rearranged our corporate structure, so we've got now 5 companies. Each company only has 40 people. 40 people is less than that 50 full-time equivalent. We don't need to file. And they say, no, no, we're looking at your corporate structure in its entirety. You can't break it up like that to avoid filing. So, no, even though you have 5 companies that are part of the same aggregate large employer group, you have 200 people. The whole group needs to file. So this, if you have a controlled group or aggregate large employer group, this is where you list the names and tax ID numbers of all of the companies that are part of that corporate structure. Now we move on to the 1095-C. Just as on the 1094-C, Part 1 here is going to deal with the employee information, and this part of Part 1 is going to deal with the employer, and they actually spell it out here, applicable large employer member, also known as employer. So that information is going to go here. Part 2 really is the meat and potatoes of the whole filing. Line 14 gives them the offer of coverage, and that basically is saying, like, it describes the type of coverage being offered to the employee. Line 15 we'll get to in a minute. Line 16 here details the safe harbor. So if for whatever reason either coverage wasn't offered for some reason or it wasn't taken, this you can actually say, oh, well, we didn't offer the person coverage in January. You would have said no offer here. And then here when you're saying, oh, why didn't we offer it? So, oh, well, this person didn't work for us until February, so that's why we didn't offer coverage in January. And then, of course, if that was the case, you'd say, okay, we didn't offer in February or March either. The safe harbor would actually be different. It'd say, we didn't offer them coverage because they're in their limited non-assessment period or they're in their waiting period. So, and on the next, on a screen or so, you'll actually see we'll list the 9 different series codes that you can put for line 14 as far as the offer of coverage. And the 9 series codes for the safe harbor, which go in line 16. Now, line 15 only needs to be filled out in certain circumstances, but in the ones where it does, we need to list how much the employee is paying, what is the employee's share of the lowest cost plan, and of that plan, the employee-only tier. So it doesn't matter what plan the person actually took, it is what is the employee's portion of the least expensive plan available to them, and that's how they judge affordability. A large part of your clients are going to be leaving Part 3 blank. This isn't going to be filled in at all. Any of your fully insured clients aren't going to have to worry about this. This section only applies to self-insured. You'll see it says the employer provided self-insured coverage, check the box and enter the information for each covered individual. Now, why that is the insurance companies themselves, they actually don't send out the C series forms, which is what we're talking about. They send out a B series form, which is from the insurance carrier. Now, for self-insured groups, they're both the employer and the insurance carrier. So this information in Part 3 is more or less the same information that would have been communicated to the IRS on the 1095B series forms. But amazingly, they actually made a good decision and said, oh, we can actually take care of this all on the 1095C. So for the self-insured clients, they'll be having their information in Part 3. Fully insured will be leaving it blank. This is the second page of the 1095C. Just gives a quick breakdown of some of the series codes there, and we'll actually go into those in just a moment. Before we do, though, I'd like to take just a moment to talk about the new simplified spreadsheets. Because the IRS kept moving the goalpost last year, there was some ambiguity of exactly how much information we would need to give the IRS what they were asking for. So I do see, again, the familiar names in the attendee list. They know that for each month, an employee had to have their information listed. So even someone who had been working for you the entire year, had no changes and was insured the whole time, they were listed up 12 times, once for each month. We've actually done away with that, and now an employee is only listed once because all of the entire year's data has been condensed onto one spreadsheet instead of having a separate spreadsheet for each month. Additionally, some of the IRS guidance has allowed us to further simplify the data that we're asking for. They made some simplifications both about COBRA participants as well as employees on medical leave. So that allowed us to simplify the forms even further than we already had. In addition, we're able to now auto-calculate the waiting periods based on your plan design. So if on your plan design, the employer information, you say employees become benefit eligible first of the month following 60 days, we're able to auto-calculate that. So assuming that they're still employed on the day that their waiting period runs out, we'll know an offer of coverage was going to be made that day, and you just need to let us know, was that offer of coverage accepted or did they waive coverage? Some of the other processes that we've streamlined involve the handling of part-time to full-time transitions as well as full-time to part-time transitions. One other benefit of all of these simplifications we've been able to add to the spreadsheet means that there's fewer spreadsheet submissions necessary. Instead of having to send each month, we're actually now able to review the data again quarterly or when you have a major hiring or termination event. So now I'd like to take just a moment to talk about the series codes on line 14. Now, these generally talk about the different types of coverage offered here. So if it's 1A, you're saying, hey, we made a qualifying offer, it had the minimum essential coverage, providing minimum value, and it was affordable. Not only that, but the coverage was offered to the employee, to the spouse, and to their dependents. And then the next few have the various options of saying, well, no, this was to the employee only, this was to the employee and dependents, but not spouse. Now, 1D is particularly quizzical because it's saying, hey, we offered coverage to the employees and spouse, but not dependents. Well, you actually can't do that with Obamacare. That's impermissible. That's non-compliant. So if you do 1D, like, they're going to come say, like, hey, you can't do this. So that's almost like a trap. So we'll make sure that you avoid that trap and not file in such a way that you're going to draw the scrutiny of the IRS. So I'm not going to go ahead and read all these. You can kind of see what they are. If you'd like copies of the presentation, either just message in the chat window. You'll have both my email and phone number at the end. So just get a hold of me in some way. I'll either get you a copy of the presentation, answer any other additional questions you have, or get you the information to sign up. So in addition to the 9 series codes that you had for line 14, you've got an additional 9 series codes for line 16. Now, with the exception of 2C, which it's odd that they chose that one, 2C basically says, yes, this employee was enrolled in the health coverage that was offered. So with the exception of 2C, most of this is saying, well, we didn't offer coverage, well, why not? And in the example I gave earlier, and I said, oh, well, we didn't offer coverage to that employee in January because they weren't employed that month. So that series code would actually be 2A. And then when I said, okay, we hired them in February, but we didn't offer coverage in February or March because they're in their waiting period, that's 2D. So this employee's in their limited non-assessment period for the month. So that's why we didn't offer coverage. So again, I'm not going to read all of them, but these are the various series codes that you can be putting in line 16. Now that is actually one of the things that we take care of for you, is you actually don't need to determine those. Just with the information that you give us, we'll actually be able to auto-calculate these codes. So that does 2 things. First, it eliminates the possibility of just picking the wrong one. So that whole thing of just getting the wrong one is done away with. And second, like 2E, 2D doesn't really mean anything to me or you as a person, so it might be very easy to make a typo. So by having these auto-calculated, we also do away with that possible risk. So they're auto-calculated, we pick the right one, and there isn't going to be any typos or any human error. So we're actually taking that element out of it and help to increase the consistency and accuracy of the report. So it's not only done, but it's done right and done on time, which is, those are the 3 things you want. So just some very quick information on our procedures for the tracking and reporting. So you sign up, we go ahead, we'll get you the data gathering spreadsheets. We'll get those to the employer. They'll compile the information requested on the spreadsheet and get that back to us. Now, this spreadsheet's actually going to have very sensitive information. It's going to have the employees, all of the employees, their names, their socials, their address, information about their health insurance coverage, possibly dependent information. So what we do is we actually have a HIPAA-compliant protected way to get that data back to us. It's called ShareFile, and we use their highest level of protection, which is HIPAA certified. And that allows us to both get the data from the employer, and you'll see here, we then review the data and we'll process it. If for some reason we need to send the spreadsheet back to the employer, we'll use that same HIPAA level ShareFile service to send the data back to them, work with it to get the corrections if needed. Now, once we get the corrected spreadsheets back from the employer, everything's exactly how it should be, we'll then go ahead and upload those revised spreadsheets into our ACA reporting system. That will communicate with the fulfillment center to get these 1095-C forms to the participants before that deadline. Again, that same system will then also be used to electronically e-file to the IRS before that March 31st deadline. Now, here's just a quick sample of what it looks like to have the 1095-C filled out. You can see the various series codes there for both line 14 and line 16. Here's a copy of the completed 1094-C with just the various information there. And that is pretty much the part of the presentation that I have that talks about that information. So hopefully that has answered most of your questions. I'll be taking the phone off mute in just a moment, so if you have any additional questions, you go ahead and send them in or ask them on the line or send them in through the chat window. If you'd like copies of the presentation, you can either give us a call at the number here, 954-983-9970, or you can send an email to info@div125.com. Now, to everyone who has stayed to the end, I'll actually go ahead and give you my email address as well. Instead of the info@div125.com, it would be Ben, B-E-N, @div125.com. That'll get right to me. I'll personally handle anything sent to that address. Just a very quick word about the other services that we provide. If you have needs that include either the Form 5500s being filed, ERISA documents such as the WRAP document or Welfare Summary Plan descriptions, we can certainly assist with those. We also do benefits administration for COBRA, FSA, and HRA. So if you or any of your clients have any needs or questions about that, we would absolutely love to hear you. So at this time, I'm going to go ahead, and I think, if I recall, the unmute button for everyone doesn't work, so I'll just be going through and unmuting people one by one. So as you hear, you're unmuted. If you do have a call, I'm going to go ahead and remute Gladys. It looks like there's a little bit of noise there. It's okay. So if anybody has any questions, I'd be happy to take any questions at this time.
Hello?
Yes, hello.
Oh, I'm sorry. So we were using an administrator, and we have some groups. We're in Virginia, and at one point in time, we had groups that were individually age rated, and this particular administrator was having a hard time calculating affordability or tracking the individual age-rated premiums. And I'm not exactly sure why it was such an issue, but they didn't. It really represented a problem for them. So
I can see how it would be some bit more complex than having just a uniform amount for everyone. But really what we would do is look at the various tiers that are available and calculate what amount, because as long as for the 2015 year it was 9.5%,
right.
For the upcoming year it's 9.56%, so we'll actually say for each of these tiers, as long as anyone was making over this particular dollar amount, that was affordable. So, and then if the coverage that you offer is actually less than, I believe it's $91.13, you can actually use the series code of 1A saying that we offered coverage with the safe harbor of federal poverty level. And when you do that, you don't need to enter the dollar amounts. But if they're not qualified for the federal poverty level safe harbor, then we would just get the dollar amounts for each one. But like I said, it's a slight complication, but certainly not anything that's going to pose a challenge of any real kind.
Okay, and are you able to then do it based upon rate of pay too? So can they enter in a rate of pay and then you monitor it versus?
Absolutely, and that's actually what we recommend. If you can't use federal poverty level, is to use rate of pay. And there's actually two reasons. First off, if for the W-2, if you have a new hire, then you have to go find out what they made last year. So it's a big challenge, adds all kinds of complications. It's possible that they're making more this year than last year, so now you're using a lower dollar amount, which lowers the affordability. So there's all kinds of reasons you want to avoid that W-2 safe harbor. Like, unless you have a very specific reason that you want to do that, we strongly recommend against that.
Okay, and may I ask one other quick question?
Absolutely.
Okay, so one other question was, they also had a difficult time. In one case, we used an 11-month measurement period with a 60-day admin period, but the way that they calculated, they only ran it from the hire date. And we generally do it like the first of the following month so that a client only has 12 measurement periods going at any given time, rather than many measurement periods based upon hire date. Can you tweak your system for individual periods and preferences?
We can. Like, for example, there's a law firm who we're doing this for, and their paralegals and whatnot become eligible for coverage first of the month, 60 days. Some of the key people either are eligible basically date of hire or first of the month following 30 days. So in those instances, that's not something that we can then auto-calculate company-wide, but that's certainly still something we'd be able to like say, hey, you just identify the key people, and we'll make sure that, okay, they're either showing coverage first of the date of hire, first of the month following 30 days. So we absolutely give it that scrutiny where if just everything's not lined up perfectly, our joke is that our crystal ball broke, so we now will just go to you, ask the questions, and make sure that we get the exact information we need to prepare it right, and prepare it on time.
Right. Well, this was like the initial measurement period, so the way that the system was working, it was kicking off an offer a month early, which was really messing them up in terms of monitoring it because of the way the way they set up the parameters in the system.
Okay, so now it sounds like you're talking about more of a variable hour thing, the measurement period for variable hour employee. Now, we actually were doing some tracking for the 2015, or we were making that service available. We're actually not doing variable hour tracking this year for two totally different reasons. The first one is that it's been our experience that most of the companies that have payroll companies doing their payroll are actually tracking those hours internally. And then second, for the small portion that wasn't, most of them just weren't able to get that data to us in a timely enough fashion for the alerts that we were going to kick back of, hey, you need to offer this person coverage. By the time we got that data, they needed to have offered coverage like 2 months ago.
Right.
So because of both of those reasons, we just weren't able to generate reports that were meaningful in a timely enough fashion for the employers to do it. And again, that was the small group of them. Most of them were already doing the tracking correct and on time internally, either at their own payroll department or through the payroll company. So it was our experience that just 99% of the people either A, already had that taken care of, or B, just weren't in a position to get us the information so we could generate the reports for them on time.
Okay. Okay. Thank you very much.
Absolutely. Are there any other questions? I see a number of people still stayed on for the question and answer session. So any other questions I might be able to answer while we're here? No, nothing but crickets. Okay, well, thank you very much, everyone, for attending. Do remember, if you want a copy of the webinar, if you have any questions you'd like to ask, just give me a call at the 954-983-9970 at the info@div125.com, or email me directly, Ben, B-E-N, @div125.com. So thank you very much, everyone, for taking time out of your Thursday afternoon, and we wish you all the best. Look forward to doing business with you.